to support them in better serving the client. So I don't think that the traditional financial institutions should be viewed as like totally separated from the needs of the population. I think what technologies like blockchain can do is actually bring them closer. And so I think those institutions that get on board with the technology and don't wait until everyone else has done it, they still stand a chance of surviving. They still add value in society, and it's my view that they're not going away. What they do need is support in getting across that blockchain complexity chasm, as we call it.
Hello and Assalamu alaikum and welcome everyone to another episode of Tech Talks. Today we have with us our special guest, Matthew Van Niekerk, who is the co-founder and CEO of SettleMint, a company launched in 2016 to simplify blockchain transformation for enterprises. Before SettleMint, he worked at KBC in various leadership roles, including the COO of the Belgian consumer finance business and head of platform innovation at KBC Securities. So that is the official biography. Tell us the unofficial story.
Yeah, I'll go back a bit. So I'm the youngest of three kids, born and raised in Canada. So I spent my youth there. Did a lot of sport in those days, not so much anymore. But I decided after university I wanted to live abroad, work abroad, see the world. So I moved to Japan. After about 4 months after graduating, I studied economics, but did that and then moved to Japan and thought I'd be there for a year. I had a 1-year contract. And 1 year turned into two to three, and in the end, it was about 7 years in total that I spent in Japan. And then wanted to go back to school and study, do a master's, and went. That's what brought me to Belgium, where I currently live. And in Belgium, I went to school for a year and thought I would be in Belgium for a year. Similar story to Japan, that I'd be there for a year. But ended up working for a Belgian bank, as you mentioned, KBC. Did a bunch of different stuff and really got into blockchain tech while at the bank. Set up, together with a couple of other people, kind of a center of excellence to explore what does blockchain mean for the future of banking. And so that was my entry. Outside of work, I'm got a wife and three kids. My son is an avid football player. My first daughter he's the eldest. My first daughter is creative, artistic gymnast, and my 5-year-old daughter is a master of disaster. She likes to cause havoc. So that's a bit outside of the CV.
Congratulations, proud father, I can see. He's even proud to talk about the master of disaster. Fantastic.
I often call her Misadventure.
Oh, okay, that's a cute one.
Yeah.
So Matthew, you said you got into the blockchain essentially as part of some kind of committee where you were studying the blockchain for the future of banking. So what were your findings there?
Yeah, there's a lot of work to be done and a lot that can be improved in financial markets infrastructure with different technologies that are than what is currently being used. And what I guess if you look at financial markets infrastructure, a lot of the systems, controls, and processes, not the systems so much, but the processes and controls that were put in place were essentially in reaction to the crash of the 20s, where at that point in time, the markets were operated by guys on bicycles carrying trade receipts to go from the trading floor to a broker. When the crash happened, they looked at the system and how it works, and okay, what kind of processes should we put in place, and what kind of controls should we put in place? What kind of intermediaries are needed to ensure that a crash like that doesn't happen again? And I think to a large extent, those same processes and controls are in place today, despite the fact that the whole world is digital today. And that means there's intermediaries that are involved that for all intents and purposes, could be replaced by a digital ledger that would perform the exact same function. So what got me into the technology and my finding for myself focused on capital markets is that there's a whole lot of efficiency that can be gained if we were to take kind of a rip and replace type approach. But of course, markets don't work that way. There's a lot of risk involved in drastic moves. So it's a gradual process to move assets on chain. But yeah, so that my key finding is that there's all kinds of potential improvements that can be made, specifically in post trade activities. Blockchain's not good for everything. Markets trade at such a pace that blockchains are too slow to match orders and to do the execution of a trade. But in the post trade clearing and settlement side, there's no reason why it should take 3 days to settle liquid assets. And certainly for illiquid assets, if they take 2 weeks or 3 weeks to clear and settle, there's ways we can improve upon that. And so what got me into the blockchain tech is not just the financial markets applications, but I saw that I don't know if I think Morad and Shireen, you probably had the same experience when you kind of learn about blockchain tech, or at least I had this experience. For 6 months, I had like 3 ideas a day about what could be done better with blockchain tech. And it's like, oh, that can be better, that can be better, that can be better. And it's understanding that I think it should be viewed as a general purpose technology, rather than a specific use case like cryptocurrency, for example. That's just one use case. But when you start to see it as a general purpose technology, the areas of society, the areas of business that can be improved, I think are staggering. And so I think the work I did at the bank was obviously focused on things around capital markets. But the things outside of that, I got really fascinated by the idea of putting elections on chain and doing stuff like that. So how can you secure democratic processes in democratic countries using blockchain technology? And that's something I can get into use cases that are quite interesting that we worked on, but that was an example of another area that has nothing to do with banking or financial markets, where I thought, okay, we can create a lot of efficiency here. For me, the finding was about the banking sector, but also outside of banking, and how a lot of society will benefit from adoption of the technology, and it doesn't happen overnight. It takes time. But there's multiple facets of our everyday life that can be dramatically improved by utilizing blockchain as a general purpose technology layer.
A quick question, Matthew. So when did you really started to be really, understanding this technology, and why is it so important? Of course, we all know, but when did you really fell into I would say, this rabbit hole, and saying, hey, I need to get in, and then of course then you can move on to tell me how you build the SettleMint, basically.
Yeah, so I mean, I read the white paper back in 2010, and I was like, okay, interesting, but I wouldn't say I was bit by the blockchain bug at that point. That didn't happen until I started to explore in 2014 the use cases in financial markets, in particular capital markets, and that's when I would say I was well and truly bitten by the blockchain bug, and it was pretty much the path was set as soon as that happened. And that was when I sometimes call it that 6 month period where you have 3 ideas a day. It's kind of a Cambrian experience, in the sense that there's just so much that can be done, and so only so many hours in the day, and what are we going to do first? It's that kind of an approach. So that for me was, read the paper in 2010, really got into it in 2014, and started SettleMint in 2016.
Matthew, let me just poke a little bit into what you had said. So our current financial system essentially is based on technology, quote unquote, that was designed in the 20s, as in 1920s. This is 100 years ago. Now we've since gone through waves and waves of technology, right? In this 100 years, it's not like we went from nothing to the blockchain. There was a lot in between. And yet the financial infrastructure is still largely based on very, very old assumptions and processes. Now, what is it that prevents, and you mentioned it briefly, you said it would be nice if we could do a rip and replace, just, get rid of everything and start from scratch. But obviously that's not going to happen. So what is it that prevents this or rather this industry, this infrastructure from catching up?
Yeah, and I would just like to highlight. I think I did mention technology, but it's not actually the technology from the 20s. It's the controls
The
and
processes,
processes.
yeah.
Yeah,
The thought process, let's
and
put it that way. The
yeah,
assumptions.
and so what prevents because when we talk about the financial services sector, we're talking about people's what are the let's say the what's involved. It's people's identity and it's people's assets. And I think if you try to move too quickly with either of those, you're probably going to make mistakes. And I think the incumbents in the market are not willing to take the risk. The regulators are preventing them in some jurisdictions from moving more rapidly with it. And that's creating an opportunity. And I know, like for example, in Saudi Arabia, there's like Sama has um, not also the Capital Markets Authority have like set up sandboxes where many companies are starting to join, and other jurisdictions that have a similar approach. But that's kind of like I would say that when if you look, so the advent of the technology being explored in the banking sector, I would put that around when I started, like 2014, 2015. That's when you had like kind of concerted efforts to really understand what does this technology mean for the future of finance. And you had companies like R3 got set up, and they gained a lot of momentum early on. Um, and you had kind of the industry saying, okay, well, and there was at the bank that I was at, we had a presentation. One of my colleagues in the Center for Blockchain Technology was presented to the CEO about this technology and what can it mean for banking. And I think it was within like 2 months, he'd organized like all company type meetings where he talked about technology trends. And he said, there's one that keeps me up at night, and that's blockchain. And so there's, at that point, that's when I saw banking like really starting to explore. But and because of internal compliance, because of regulations, for a number of reasons, those applications and that R&D effort has not yet turned into productive applications on a grand scale yet. But I think it's not totally abnormal for new technologies to take a while to filter through. If you look at the internet when that came out, there were, of course, early adopters that start using, creating websites and financial institutions that start to have an online offering. But there's still many banks today that are digitally transforming. So that that's something that we can say is already, let's say 2002, 2003 onwards. So 20 years with that, and blockchain being the next layer of the internet. That's kind of okay. We're, let's say, since 2005, 2015 or so, kind of concerted R&D type exercises started. And so we're 9 years, 10 years into that phase. And I think it's the next 10 years that'll be really exciting from an implementation perspective. So we do
Well,
see pockets where it is being implemented, but it's not wide scale yet. It's still nascent. It will become prevalent over the next 10 years, I think.
yeah, so my thought process is you guys are way too late. It's already happening with or without you. And this is the thing. This is the thing about blockchain that is interesting. It didn't require infrastructure or the existing financial infrastructure to function. So a lot of the very basic sort of banking applications, and now even insurance with things like what we're doing, can be
Yeah.
completely conducted on the blockchain itself, and rendering essentially the banks or some of these functions from the banks kind of useless. And I get that there's this need to be careful, especially from a regulatory perspective, but it's actually ended up leaving a huge gap with regulations that has resulted in a lot of people getting hurt because they didn't really know what they were getting into. And so the whole thing, so this feels to me like a huge moment of disruption where I don't see the banks being able to catch up just because there's too much regulatory capture. There's just too many things holding them back. And I just don't see how they're going to figure out a way to speed up what they're trying to do. Because to your point, it really can't go any faster, right? Because of all the risks that are involved. What are your thoughts?
Yeah, and I think there it's the are we too late, or sorry, not me, but or settlement, but is the banking sector too late? I think that's the question you want to ask, and I think let me kind of ping pong back with a question. Do you think that large institutions will disappear in the future?
I think they will become less and less important as different types of organizations take over. There will be still very many large organizations, but the largest ones will be the ones that are incredibly digitally evolved. Just as the largest businesses today are Facebook, Google, that sort of organizations. So when it comes to financial organizations, I think you're going to see that the current infrastructure is going to start to be less and less important, especially as the global south, the developing world, starts to move all of the finances in that direction. I just read an article today about how CBDCs are going to be introduced in China and Saudi Arabia. They have some kind of partnership going on. I read Malaysia is going to join the BRICS. And so all these things are happening as we speak. And there's just everyone is experimenting and trying and doing new things and trying to move on the blockchain aggressively. All the while, the consumer, the average Joe, is already on it, or not everyone, but there are already a lot of use cases there.
Yeah, and I think that I'm trying to think like, would I see that kind of a technology adoption trend being different in the blockchain space to say AI or something like that? You will have the leaders that are and the organizations that get on board early on and they start to adopt the technology and they create new business models. But the biggest group with any technology adoption curve is the laggards, right? The ones that are, and then do they make it across the chasm that this new technology creates from a technological perspective or not? So I don't think I wouldn't say that the blockchain technology adoption curve is any different than other technology adoption curves. At least in my experience, I don't see it as fundamentally different. And I understand that there is the potential to decentralize and greatly diminish the role that let's say, a complete laggard in the financial services sector would. They would be potentially completely disintermediated from the future of finance. But I can say this: there are a heck of a lot of banks out there around the world that are experimenting with DeFi solutions, and looking at how can we launch stable coins, how can we on public networks and do everything in either. So there's, and what I've said through the years to most of the banks that I talk to is don't ignore that stuff. See it as like kind of a petri dish that you can you can see what's happening and you can examine it and you can learn from it, and then figure out within the regulations that are current at that time, how can you utilize it for the benefit of your clients? Because every bank I talk to has one focus point, that's the clients. And all of the technology trends are there as tools.
We'll be right back after the break.
Taka Talks brings you stories from around the world that will help you understand how crypto and Islamic finance can change our lives for the better. Subscribe and follow to keep learning.
As tools to support them in better serving the client. So I don't think that the traditional financial institutions should be viewed as like totally separated from the needs of the population. I think what technologies like blockchain can do is actually bring them closer. And so I think those institutions that get on board with the technology and don't wait until everyone else has done it, they still stand a chance of surviving. They still add value in society, and it's my view that they're not going away. What they do need is support in getting across that blockchain complexity chasm, as we call it.
Yeah, and seems like the leadership is aging, and they're not really giving up the reins. So this is one of the problems as well. I did want to address one thing about the technology adoption curve. If there's no external stimuli, it's probably what you're saying is exactly the academic is probably the correct theory of how technology gets adopted. But then when you have an external stimuli, now one of the external stimuli was COVID. I'll give an example of e-payments, I want to say, especially e-payments in Saudi Arabia. So COVID made everything online, and all of a sudden every single shop, even the smallest one, the guy who's delivering water or whatever, had some kind of digital payment solution, right? And that just greatly accelerated e-commerce and the adoption of e-commerce. And I want to say that even my parents, who probably never bought anything online or didn't trust it up until COVID, now everything they buy is online. And I want to say with the blockchain and with cryptocurrencies today and CBDCs, etc., there is a very strong external stimuli, and that actually comes as the follow on to COVID, which is inflation. Inflation and historically extremely high interest rates have actually devalued so many currencies that much of the global south is now pushed to use cryptocurrencies. I'm pretty sure they wouldn't have it if they didn't have this external stimuli. But this is the situation we find ourselves in. So
yeah, it's interesting you mentioned that. Like what we when we were getting started, we did a project in I think it was centered around Zimbabwe, and then there was it was an insurance, a blockchain based insurance thing for crops. So something like 99% of crops are not insured. So you got a big vulnerability if something happens, and the number one cause of displacement in the country is flooding. And something like 70 or 80% of the economy is built on agriculture. So you put those three things together, and you've got like a terrible thing terrible events that happen on a regular basis where people's livelihood is wiped out. And when we were building it, it was like, okay, let's put the insurance part on chain, and let's how are people going to, from a community, going to contribute to the covering the policies of farmers that want to get it. And we drew the same conclusion. I mean, we said, okay, don't use fiat for the basis of the policy claims and the payments. You use Ether because it's much more stable than the domestic currency. It has been historically. So drew the same conclusion there, and I think it's a very valid point. If you look at countries like Turkey, they've had a lot of extreme movements in their currency, and with devaluation, essentially, it's not really. It's in one direction, essentially.
it's
So
one
that
downward
is,
movement.
yeah. So and that's that. So it highlights, like where, or if we say there are pockets of adoption and markets where it's more probable that adoption will happen sooner. There are factors like that for sure that act as a catalyst to drive adoption, because if it's a more stable store of value, then people are going to look for it. That's been true throughout history.
Absolutely. So tell us a little bit about SettleMint. Tell us what you guys do.
Yeah. So when I'll come back to why, the start of the company, the start of the vision for the company. That's when I was working within a bank and trying to innovate with blockchain technology in capital markets in my case. And what I found is that there's, I had a list of like 15 different use cases where I thought, okay, this can help us bring more value for our customers, whether that's an issuer of an asset or an investor in an asset, or some other party involved in capital markets processes. But what I found is that I had my list of 15. I said, okay, let's start with this one. And the first question I got internally was, okay, block what? There was no in-house knowledge of the technology, and even just so what. And when I didn't give up. I kept on trying, and see, I ended up outsourcing some of the work to a company that was more specialized, and they were able to deliver fully functioning applications that use the technology. And what I said to myself is, okay, well, if I've hit 15 different walls trying to experiment with this technology, I'm just one guy in a bank. Others that are exploring the technology are going to hit the same walls. So with the conviction that this technology is going to have a very significant positive impact on society, the second, and B, that this technology, it's nascent, but it's going to become prevalent through time. What does the world need? The world needs a platform to make it easy to build blockchain applications. And that's what I set out to build together with my co-founder in 2016. And that's what we do at SettleMint. Is we've built, first of all, we built the tech part. So that's a platform that any Web2 developer, any competent Web2 developer can easily build on Web3 infrastructure, all the way from nodes to use cases to integrating with their existing off-chain systems. So it's there's the tech component, but achieving successful transformation is never only about the tech. The tech is the tool. So what we've developed is an approach at SettleMint that connects the dots between the people, processes, and technology, so that the success rate of blockchain implementations can be a lot higher. And just to put some numbers on that, so I think about a year and a half or 2 years ago, Deloitte had a study that highlighted that 85% of blockchain projects fail. That means only 15% are able to cross that in an enterprise context. I'm talking about. So 15% of them somehow magically get across this complexity chasm that blockchain introduces. And what we want to do is make that success rate 85%, and so flip the numbers around. So, and to do that, you need the tech, of course. That's the tool you use to do it. But on the people side, you have to bring knowledge into the organization so that they understand they're not applying the technology blindly. It's okay, well, it makes sense in this case for that reason. In that case, a centralized database makes more sense. But to be able to build that knowledge, so we built out kind of an online learning thing with certification and all kinds of stuff, so that and not only on the tech side but on the business and blockchain basics type thing. So that covering the people part of the transformation process is, in my view, equally important to purely the tech. And on the process side, that's like, how do we manage this change in the organization? And how do we ensure that the organization can move in the direction that we're moving in with this technology? And for that, we work with a network of partners that are specialized in things like design thinking and strategy consulting on how organizations can, and not just that part, but then the implementation as well, to build out new solutions with the technology. So what we do at SettleMint is, I would say, kind of a holistic approach to make sure that we connect the dots between the people, process, and technology to make sure that blockchain transformation journeys are more successful than they have been in the past. Maybe another
Perfect.
statistic that I think kind of paints a bit of a picture as well. It was just a study from, I think, November of last year. And it was a study of how many blockchain developers are there globally. And it's a really great study. Maybe I could share it afterwards. But today, less than 1% of developers in the world have any experience with blockchain tech. So if we want to realize a change, whether that's gradual or more rapid and disruptive, the people need to be able to build. So, and that's the biggest challenge. And I think I mentioned regulations and so forth that's holding adoption back, but there's a huge skills gap, and we're trying to do our part to address that, both through the tech side that makes it easy so that any Web2 developer can build Web3 apps, and the education side, the knowledge side, and the people side, and so that we spread that information, that knowledge freely, so that people can be inspired and understand why this technology can be impactful for whatever kind of business activity or societal activity they're working on.
So the challenge in scalability in your model, for example, is really having, like you said, the holistic, maybe 3 parties coming on board, your platform, being builders, and of course working with the enterprise. So how do you kind of scale this and make it because if you have a certain amount of customer coming on board, so how you go and how do you control that and manage this through your community or through your platform, if you may share a little bit?
Yeah, sure. I mean, the let's say the tech is already built, and it's so that there's not really a technical scalability problem, and it's only getting better through time. So we deploy on-prem, we deploy cloud-based. Users can decide. So it's scalability from a tech perspective is just putting more CPU, RAM, and storage against the applications they're running. Now, blockchain technology is also in parallel getting more scalable. Things like roll-ups and so forth are kind of changing the paradigm a bit in terms of what kind of scale you can reach with blockchain applications. And so the tech part is not really an impediment to scaling. The change management side is usually the most time consuming. And in our business model, in our go-to-market, we partner with companies like Fujitsu Companies like in Saudi Arabia with MIS is our local implementation partner. And so we have a network of around, I think today it's growing every day, but we have around 24, 25 implementation partners and working together with them. That helps us as a company at SettleMint to scale more rapidly than if we were to try to do all the process side of the digital transformation directly. That would be very unscalable. So by bringing on a network of partners, giving them training on how to use the tools and so forth, equipping them with what they need for the tech side, then that's our recipe, if I can call it that, for scaling more rapidly than would otherwise be possible.
Amazing. So I want to go and move into something interesting that we met at the conference actually in Saudi Arabia, Riyadh, where it was the 50th anniversary, I think, of Islamic Development Bank. And we were surrounded by a lot of amazing people, I would say. And at the same time, I got the chance to hear you on stage and also really talk to Dr. Hilal, and who told me you should really talk to Matthew. So an organization like Islamic Development Bank is now driving, I would say, innovation in terms of integration through blockchain solution and stuff like that. So if you want to share a little bit how they move into that space, because it's a very old organization. Usually people are like very stubborn to move. But how was the declick, I mean, for you and them to drive them into blockchain and kind of bring them to this new technology to uplift their organization, I would say?
Yeah, and on that, and I think with any organization that's been around for a while, whether they're big or small, whether they're able to get on, start to explore, it's fantastic leadership. I'm just going to say that. What the acting director general of the Islamic Development Bank's Institute is a gentleman that I've known for several years already. It's Sami Al Sualen, and Dr. Hilal is one of the team members within Dr. Sami's organization. And when we started collaborating with the Islamic Development Bank in 2017, so that was it was actually SettleMint's first client abroad was in Jeddah. So that was my first exposure to the Islamic Development Bank, was working together with them on the development of a model for subsidy distribution. So looking at the member countries and creating a model that can utilize blockchain technology. So we're talking about programmable money and CBDCs before those terms existed. So they called it social cryptocurrency. That was Dr. Hilal's or the Islamic Development Bank Institute's term for that. And I was, to be honest, I came from Canada, as mentioned, then lived in Japan for a while, then living in Belgium, and I had not seen such visionary leadership in my interactions with other organizations, be that banks or others, to be looking that far ahead and saying, okay, here's a new technology, and I think there's visionary leadership for sure, and creativity and curiosity about seeing how can we solve real world problems with technology. And that is something I have a lot of respect for everybody that I've met at the Institute and at the Islamic Development Bank for having that approach to, okay, there's a new technology coming. We see under the guidance of Dr. Sami, they saw some ways that this technology could be utilized to address, in the case of subsidies. So this is like people's needs, whether those are the need for subsidization of different types of healthcare or food subsidies or what else?
Yeah, so any use cases that are very like any member state can adopt it, because now you have the Islamic Development Bank, SettleMint, of course, coming together. And then who are the most, I would say, market or country that are like more receptive, I would say, to the solution that's happening now?
Yeah, let's there I would zoom out because we work in different markets, and I do see right now the market, and this is not specific to the Islamic Development Bank, but in the markets where we're active. So we started in Belgium, 2018. We opened an office in the UAE in Dubai, then India in 2019, Singapore 2020, and Japan in 2022. The markets where I see the most propensity to adopt this technology are two in fact. There's the Middle East region. There's a lot of investment in new technologies. Today, it's mainly AI. Let's be honest on that. There's a lot more attention today on AI. The other market where I see a lot of propensity to adopt the technology is Southeast Asia. And here, I think it speaks a lot to was another study. It's a couple of years now, but if you look at and I use the word propensity to adopt, and what for me, how is that defined? It's where countries or companies or organizations within a region they go from R&D activity to production. So this is going back a couple of years, and there was an interesting study done on that where North America, that propensity to adopt the technology was around 5%. Europe was around 7-8%. Southeast Asia was like 15%, and the Middle East was more like 11-12%. So I think that is where interesting things happen as people move out of R&D activities and into production, because that's when it has real impact on society. And so we've done work in Indonesia, for example, in 2019 for the presidential election. Did a parallel vote count together with the University of Indonesia, where yeah, that I was again. I'm just speaking from the experience that I've had, not anyone else's experience, but it was really amazing to me to work with individuals and departments in that university that were so open to, well, let's just do it. You know, there's a problem that we want to fix, and we think this technology can do it. We're going to do it. And and I think that the process is maybe a bit longer in other parts of the world. But yeah, so sorry to come back to your question, what are the areas that I see most activity? And by activity, I don't mean experiments. I mean going to production. Those are in the Middle East as well as in Southeast Asia.
So, Islamic Development Bank is a very interesting organization. Just for the benefit of the audience, it's a bank, but it doesn't really do any banking services, at least not for the retail consumer. So they really work as a organization that consults with large governments to move things ahead. Or sorry, I mean they're an organization that works with governments to sort of improve the well-being of, I want to say, the Muslim world. Now, having said that, as you said, there's just this very visionary leadership, and they want to do a lot with the blockchain technology. And this is how we also got introduced to them, because they actually reached out when they heard about what we're doing, which is Sharia compliant insurance, etc., etc. And they say, we want to talk, and we have these patents and things like that. So what kind of work did you do with them? What are some of the things that you found to be extremely exciting coming out from ISDB and into the Muslim world?
Yeah, yeah, and I think just about the Islamic Development Bank, they're a multilateral development bank. So essentially, that's like other multilateral development banks. These are like the World Bank, so I think you can characterize in a way the Islamic Development Bank is kind of like the World Bank for the Muslim world. It's kind of fits in that same kind of framework. They have pretty diverse activities. So they have the Islamic Development Bank, and indeed they're not a commercial bank. They're really working with member countries to implement or to guide. They don't implement themselves, but they're guiding member countries on and training and doing a lot of work to, let's say, improve the financial and economic systems in the member countries. And the approach they take is not, here's a playbook. It's very much hands-on training in country with governments or social organizations to realize effective and long-term sustainable change in the member countries. So I think I'm really, that visionary thing is very strong when in having conversations with senior people there. It's quite it's refreshing for me. I'll just put it that way. But the things that we've done that I can talk about. There's the one the subsidy distribution project that was done. That was back in 2017, 2018, and presented that. I think it was the 46, maybe the 40, might have even been the 45th annual meeting of the Islamic Development Bank in Tunisia, where we focused on that one. And another one that is publicly talked about is the one that was announced that I think you saw, Murad, in Riyadh when we presented together with Dr. Hilal about the smart stabilization system. And that is one of the, they have 3 already approved patents. The smart stabilization system is a 4th patent that's still pending. And
can you just explain what that does?
Yeah, it removes volatility in asset prices in publicly traded markets.
How does it work?
So current capital markets and they work with different ways to intervene when market conditions are not reflecting market fundamentals. A common one is like circuit breaker. So something is going crazy with the markets, and they stop trading. But of course, it's too late at that point, and you're disrupting market activities. Now, what the smart stabilization system does is it's more predictive based on what's happening in the market to say, well, let's take a little bit of froth out of the market today, right now. Let's add a little bit. Not going to go into the technical details of how that works. But yeah, no, the smart stabilization system looks at real live market trading activity and identifies moments where volatility is expected to be irrational in a way or extreme, and it will take some of the liquidity is the wrong word, but it'll take some of that out of the market and store that in the form of a tokenized obligation towards the investors that are participating in the market activity. And it will take out of the market and put back into the market according to the algorithm, which is subject to the patent.
Got it. So the way it works is the ISDB will develop this technology, and then they will go and they will say to their member nations, here, we've built this, use it.
Well, I think that's probably the opposite of what they would try to do, because that would never work. The philosophy of the Islamic Development Bank, I don't think, is one of imposition. It's very much in creating tools and mechanisms where member countries can benefit. But I'm quite sure that they never kind of impose or anything like that. So what they would look to do with it is look for in future phases of the project is engaging with market participants, explaining how the system works, starting to do tests and pilots with them to prove that it not only works with the data that's used today, but in different market conditions and in different types of assets, it can have the same impact, which is decreasing volatility in the price of an asset. And where I find that really quite, and we've talked, I think at the 50th anniversary, I presented, I think, 3 or 4 different use cases in capital markets where this could be useful, covering everything from publicly traded emerging market stocks to emerging market governments themselves, to providing funding for sustainable investments in member countries, all kinds of things where. And the other one that's more Sharia specific was around the use of collateral for lending purposes. And quite often, the collateral that's used is a publicly traded asset. And if those assets are subject to volatility that is not representing market fundamentals, that really creates a burden for the provider of the, let's say, the holder of the collateral. If the value of the collateral drops too much, then that's, I've got to cover the drop in the value of the collateral. So at any rate, and then there's all kinds of other financial products that have to be utilized in order to achieve that. So there are a number of use cases where I think this can be extremely impactful. And then, in the future, what we want to do is we did at the 50th anniversary in Riyadh. We kind of made an open call to any market participants, hopefully that were watching from a distance or in the audience, to reach out if they would like to engage in piloting of this for further next steps with the solution.
Understood. My last question for you really is, obviously, I mean, we are building ourselves. We're builders on the blockchain. We obviously chose a different path. We believe in building something completely new out of the blockchain infrastructure that doesn't really rely on existing infrastructure. But there is a strong argument to be made that the blockchain, like you said, is general purpose technology and should be implemented and used across large organizations that already exist. In your opinion, who needs you the most? What kinds of organizations will have the greatest need, and in your view and in your experience, the greatest successes from implementing the blockchain?
Yeah, and I think it's almost like a chicken egg thing. Like we've built it for a specific purpose, for a specific type of organization, and therefore it's really designed for the needs that they have. Which kind of dictates that they're the ones that are, hope if we've got the design right, they're the ones that will get the most benefit from it. So but who really benefits? Ultimately, it's the customers of the organizations that build better services using our solution. So whether that's to give an example of the voting use case, the beneficiary who's really benefiting from that one that was voting in Indonesia's 2019 presidential election. The citizens are the ultimate beneficiaries of that. What happens in that case? Both parties declare victory, and 6 weeks later, it takes 6 weeks to count and finalize the tally. And in that 6 week period, something like 520 people died in the unrest that period of uncertainty created. And with the application, that was down to that window for unrest was down to 4 hours. So if you can close that window for unrest, you save lives. So who's the beneficiary? The citizens in that case. And I think that'll hold true for in all cases, because there's not any examples where there might be a few where it's purely back office and optimization of processes, but presumably that's going to trickle through either to the end client, either in more cost-effective services or more seamless and straight-through type processes. So I think that I would hold that the ultimate beneficiary and the one that will benefit the most from what we're doing is the people in whether they're voters in Indonesia and citizens in Indonesia, or the clients that are using the services that are built by a bank on our platform. They're the ultimate beneficiaries.
Yeah, I just wanted to know. So the election years is every 5 years, I think, in Indonesia, isn't it?
It's coming up, and we're not doing it again, unfortunately.
Okay, so how do you roll up other election with other nations, since the use case was kind of successful? Do you have a plan to roll up? Because, as you mentioned, it's a great tool to preserve life in a sense.
Yeah.
And it's also bringing transparency. There's a very, very almost no way to hack the election or to cheat the election in a certain way as well, because it's really blockchain. So there's no way transparency open to everybody to see on chain. Do you see America moving into that space, for example, the US?
Well, Indonesia was the second country we did. In the fall of 2016, there was a big election in the US where we also did something similar, but that was Trump and Clinton that were going at it. But that was more of a small pilot type project. But as this is, when I was mentioning about, there's kind of that Cambrian period where you have 3 ideas a day that are, I could do this, I could do that, I
happening.
could do this, I could do that. And as a company at SettleMint, we are always hitting ourselves on the hands. Don't go for that one. Don't go for that one. Because as you said, like to roll it up into a solution would mean that as SettleMint, as a company, we're becoming a vertical solution. Now, what we do, and that's not our ambition as a company to be a vertical or use case specific solution. We are a general purpose platform for a generous purpose technology. Now, how do we? So for us, what rolling up would mean is that we take all of the smart contract logic and we put that as a template in the platform. And then anyone, and again, this is how do if then the more people that have access to the platform, the more people can build such use cases.
Solution.
So
Yes,
our
they can build solution on Topple, yeah. So people can just build on what you have been building and take the vertical into horizontal and just get the solution. So interestingly enough, of course, I really wanted to reach out back then before, and I had another meeting outside of the conference, and then finally we meet again on this podcast. But as you know, Sharon and I and the team at Takada are building this insurance, and we see a lot of use cases now happening where we kind of really take the insurance model as we go back to the origin of insurance, which is using community based, so people come together and insure one another. And what we see, of course, we are building our first insurance DAO where we help people to insure one another, and we are using the use case of, I would say, life insurance. That's the first DAO that will be launched. But we see a lot of organization, peer-to-peer lending, other, Uber drivers, massive amount of people coming on board to insure one another, and eventually, organization who need to create their own community-based insurance. And we're moving also into like a B2B solution, I would say, for different country, different organization and stuff like that. And that's why I was really interested in seeing what we could later on, help or partner with your organization to see how we can really not bring the banking system, but the underwriting insurance system within your platform as well, where we can create any type of insurance from scratch, basically.
Yeah, and I'll take that as an open call. That next time I'm in Riyadh, then we'll sit together and see how we can see if we find ways that we can support each other's growth.
Definitely, I'll share more, inshallah.
So thank you, Matthew, for this excellent conversation. Very last words are yours. Where can people find you? How can they reach out if they want to work with you?
Yeah, so best place to find me and to find SettleMint is probably, and what's happening with us is LinkedIn. So LinkedIn, we not really into Telegram and other channels like that, but LinkedIn for sure. And our website is updated kind of regularly. So if anyone would like to explore like what can our platform do for them, we do have like a kind of a complimentary entry point, so you can go onto the platform, test it out. If you have a use case in mind, see if you can build it, and get support through Discord. Our channel there is well maintained and managed, and the documentation that's with the platform is there to guide you through the process of building different applications on different technologies. So I think to follow us LinkedIn, and feel free to explore the platform as you like.
Great. Thank you so much.
Thank you so much. Amazing.